Assalamualaikum and hi. Today we are going to present about type of investment, which is financial and non-financial assets. Before I start the presentation, let me introduce my group mate first. So let's start with our first group member, which is Nadira. The second one is Fala, and the third one is me, Afiq, and the last but not least, Afnan. First, let's look at the definition of the two main types of assets, which is financial and non-financial assets. So, first, financial assets. These are intangible or non-physical assets. Their value comes from contractual claims. For example, stocks, bonds, and bank deposits. You don't physically hold something like a share certificate anymore, but its value is real and based on agreement and markets. Next, we have non-financial assets. These are tangible, physical items like property, gold, or other commodities. Their value depends directly on the market price of the asset itself. So, if gold price rise, the value of your gold increase accordingly. In summary, financial assets are based on paper or digital contracts, while non-financial assets are physical items whose value is tied to real-world markets.
Assalamualaikum and good morning to Miss Bell. Today I want to explain about the investment through Islamic banking. For the Islamic banking is a banking activity that is consistent with the principle of Sharia, which is Islamic law, and it is practical application through the development of Islamic economics. The examples of investment products that we can find in Islamic banks are fixed deposit and mudarabah, general investment account. The initial deposits are higher than savings account, and it has a maturity period. There are various ranges of profit rates depending on the amount of deposit and maturity period. Example for the Islamic bank in Malaysia is Bank Islam. That's all for me. Thank you.
So, I am Farah Hakim and I will deliver about non-banking institution. Non-banking institution is not a financial, industrial, commercial, but it is important to our economies and national development. So, non-banking financial intermediaries can be classified into 5 groups. So, I will talk 2 groups and another 3 groups will be presented by Nadira binti Hazri. So, the first one is a development of financial intermediaries, right? Like that. So government develop special bank for help in certain sector. The first one is Agrobank and BPNB second one, which is Bank Pembangunan Malaysia Berhad. So Agrobank is focused on agriculture and the main target Agrobank is a farmer, fisherman and others. So BPNB is focused on project infrastructure, financing, industrial and technology. So the main target for BPNB is a big company, government project and long-term investment. So let's move to the next slide. So the second one is a saving institution there. For example, Tabung Haji. Tabung Haji is not the bank, but Tabung Haji is a financial institution for saving money for Muslim to do ibadah haji, and Tabung Haji also is trust investment for Muslim because it's safe from the scam or scammer.
KWSP or EPF. This is a retirement savings scheme managed by the government. Private sector employees thus working in companies and business must contribute a portion of their salary to EPF every month. Their employer also contribute an extra amount into the employee's EPF account. Government employees usually have a different pension system, but they can still choose to contribute to EPF if they want extra saving. For PRS, this is a voluntary saving plan to help Malaysians save more for retirement. Anyone can join, whether they are working for a company, self-employed or not working. It's a good option if you want additional saving on top of EPF. If you are self-employed, you don't have an employer to contribute to your EPF, but you can still save for retirement by making your own contribution to EPF or PRS. This help to ensure for your future saving. Thank you. Insurance company provide financial protection to people and businesses. When you buy insurance, you are paying the company a fee. So that if something bad happen like an accident, illness or damage. What is takaful? Takaful is Islamic insurance based on Sharia. It works differently from conventional insurance. Instead of buying protection from a company, participants contribute money into a pool to help each other. If someone faces a loss, the money is taken from the pool. Takaful is based on mutual cooperation, responsibility and helping one another. It also avoids interest, gharar and maisir, which are not allowed in Islam. Takaful operator. Takaful operator is the company that runs the takaful plan. It works like an agent for the people who join the plan. It is called participant. The takaful operator helps manage the money in the takaful fund and take care of all the work. In return, it charges a fee for its services. So basically, the takaful operator help manage and protect the fund of behalf the people for doing their job. For investment linked takaful is a family takaful plan that give you protection at the same time. Part of the money you pay is called contribution to give you takaful coverage such as death or total disability. You can choose the type of investment fund depending on what the takaful operator offer. So with this plan, you are protected and also have the chance to grow your saving through investment.
To wrap up our presentation, here is a list of licensed takaful operators currently operating in Malaysia. These companies are authorized by the relevant authorities to offer Sharia-compliant insurance services known as takaful. They include HSBC Amanah Takaful, Prudential BSN Takaful Berhad, Etika Takaful Berhad, Sun Life Malaysia Takaful Berhad, Syarikat Takaful Malaysia Berhad and Takaful Ikhlas Berhad. Each of these companies play a significant role in providing protection and investment solutions that comply with Islamic principles, catering to both individuals and businesses.
For the conclusion, there are many types of investment like stock, bonds, real estate and savings. Each type has its own level of risk and reward. It is important to learn the basics so you can choose the right ones for your goals. By mixing different types of investments, you can lower your risk and grow your money over time. Knowing the basics of investing helps you make smarter financial choices. Thank you.